So we're looking at the S&P on the left, the Nasdaq in the middle, and the Dow on the right on the 1 hour time frame. And stated in the last night's pre-recorded lecture, I said this sequential SMT right here, I would like to see FOMC deliver higher going towards this high right here. Now I said it was 50-50. I don't want to take too much credit for this move or anything because I did say it was 50-50 and FOMC could really go anywhere. But there was a main indicator on specifically why I wanted to see it deliver higher, which we will get into. But as you all can see, we traded below this low on Tuesday for the Nasdaq, and on the S&P we created a failure swing. Whoops. Did they change the button? Does anybody know what the button is to do the highlight thing for the demonstration tool? Oh, it works now. Okay. There we go. But we had this SMT right here, which is what I said I wanted to see to kick off the run. And it was below the true week opening price, which is important. SMTs that happen whenever you see the weekly halving theory come into play, and it's an SMT between Monday and Tuesday, and we expect Monday or Tuesday to form the high or low of the week as is, being a 2-3 sequence, then SMTs between Monday and Tuesday hold pretty good substance. So it kind of adds probability to it, as well as it being underneath the true week opening price. But looking a little bit deeper, we can see that the currencies have been completely lackluster, offering just back and forth price action, really choppy, really consolidative on the higher time frame. Is this what we expected? This is the interactive part. Yes. We wanted to see the futures triad play catch up and deliver higher, while the currencies, since it already expanded higher, we wanted to see them just stay lackluster. So whenever you have situations like this, where the currencies market decouples, as it is, and you're expecting the currencies market to be completely out of sync and just lackluster, while the futures market plays catch up, for intermarket analysis, that is whenever the bonds triad actually comes into play. Jacob, when do I use the interest rate triad or bonds triad, whatever you want to call it? I call it the bonds. When am I supposed to use this for intermarket analysis? I've been asking you all year, and you told me later. This is whenever you're really supposed to use intermarket analysis between the bonds and the futures triad. So there is a specific order at which intermarket analysis actually comes into play. And I'll draw it out like this. So first you have the index futures, and then you have currencies, and then you have the bonds. So intermarket analysis between the index futures and the currencies will have a greater impact on each other. But if the currencies are decoupled, that's whenever you can use intermarket analysis between the index futures triad and the bonds. That's whenever that's most suitable. And you specifically want to look for this on the weekly cycle and higher. So for intermarket analysis between index futures and bonds, weekly cycle and higher. But for index futures and currencies, it doesn't really matter. But the only time you should use the bonds is whenever these guys are decoupled from the index futures triad. That is whenever you can use index futures and bonds. But going back to the bonds triad, and the ticker symbol for it all is you have ZB1, ZF1, and TN1. So as you can see, we have a monthly cycle bullish sequential SMT, as well as right before FOMC expanded, we formed a weekly cycle sequential SMT, being a two-stage sequential SMT. Now, what did I say at the very beginning of this week? What FOMC is likely to do if there is a cracking correlation beforehand. Expand in that direction. Exactly. And it's important to keep in mind, both of these SMTs happened in regards to their true opens. So this was actually a two-stage intermarket sequential SMT with a monthly cycle sequential SMT governing it. It all makes a little bit more sense now, doesn't it? But you have to follow the rules. And this is why it's important that you're with me and you don't just watch a 5-minute video and then try to go out there on your own and use it. Because you have to have context behind it and you have to know when to actually use the bond market in comparison to the futures market. And yes, for the person saying in chat, you don't necessarily need this. Like I said, the same rules apply for intermarket analysis. The only time you really need to look for intermarket analysis is when there's absolutely nothing tipping its hand on the triad that you trade. That is really the only time. You can do crazy predictions and have crazy accuracy just between the duos. You've seen me do it before, where we've only focused on the S&P and the NASDAQ, look for cracking correlations between these two, and I've had insane accuracy. But if there's nothing really tipping its hand and you don't really know, and the currency triad is out of sync, that's whenever you can look at the bonds, look for something tipping its hand, and then come over here. So for the bond market, I would like to see price continue in the direction it's expanding, going for this high and these highs right here. And then for the futures market, I would like to see continuation, and then probably tomorrow or Friday, see the NASDAQ come run above these highs again. So we could just expect continuation. So you don't expect the weekly cycle sequential SMT between Tuesday and Wednesday to hold. Unless you're counting the bodies, there's no real SMT here. There is a hidden weekly right here. But what do we have the lower end of the range? Sequential cycle without TPD. Yeah, generally with intermarket analysis, it's a lot more difficult to spot, especially with the bonds, just because the bonds, as you can see, it's a kind of an obsolete market. It doesn't really move as much compared to index futures, or doesn't move as clean. So TPD is tipping its hand. That's mainly a Forex and index futures kind of ordeal. But two-stage sequential cycle SMTs very well can still happen. And this is not hindsight, because those that have been in the one-on-ones, some of you guys have asked about intermarket SMT. I don't know if any of you are in here, but you guys know that since I believe like Q2, I've been saying I wanted to see CPI and FOMC take this higher. So does the monthly cycle intermarket SMT that create a bullish true reversal that we've been waiting for. Does a true reversal require an SMT just between the futures triad? In a sense, I classified this as a true reversal. I don't see much of a reason to just completely drop right now, at least. I would still like to see continuation. Why using TN1 and not ZN1? This is the bonds triad. These three assets right here. You could throw ZN1 into the mix, but TN1 that's what I prefer. So what if we see a bearish monthly cycle SMT on indices with a second stage? Would that overpower the intermarket SMT at the lows? Yes. And how to actually integrate a bias into a trade. If you know what the higher time frame direction is, all you need to do is wait for time and price to be aligned. What do I mean by that? You already know what times setups form intraday. So all you have to do is just wait for a lower time frame cracking correlation to get alongside the run. Similar to what happened down here. I believe there was some SMT down here, a form of SMT. So once you have the narrative, all you have to do is wait for a lower time frame cracking correlation at a specific time of day to get alongside a run. Two stage mean the second stage is always a lower time frame? Yes. And yes, this could cause somewhat of a retracement, and it already has with this SMT. So it could cause for a retracement before continuation higher, but all that would do is just solidify exactly what you would like to see. Remember, you said in the free lives at the Telegram that you like to use intermarket daily cycle sequential SMT with the bonds. Is that correct? And yes, that is correct. But for best case high probability scenario, it's difficult to filter out when to actually use that. Everything that I put out, even for free, still works. The model all the way back, I think it's been a year now at this point. Looking for that two-stage cracking correlation in the morning, it still works. It's just knowing when it should work. That's the only difficult part. best case scenario is that this remains low of the week, and we continue expanding higher, and then we could see if we run higher, come drop back within the range later in the week. Which asset is stronger right now? You guys tell me. You guys tell me. We're getting mixed answers. Why? We don't trade the Dow. It's the S&P. Why is the S&P stronger? Telltale sign number one. Which one made the failure swing? Which one made the stop run? The S&P. After FOMC expansion, a timed candle that has a specific news event within there. Well, actually, I'll do it like this. In regards to looking at this gap right here, at this specific candle, notice where the S&P closed compared to the NASDAQ. What do I mean whenever I say every single candle is a cracking correlation? This is what I'm talking about. You'll get to a point to where you can gauge strength and weakness just by looking at the chart. You can visibly see that the S&P closed greater above this gap compared to the NASDAQ. So if we were bullish, the S&P would be stronger for upside. If we were bearish, the NASDAQ would be stronger for downside. And that's something else. I'll read out the question. You mentioned in the price review something about FOMC being correlated to interest rates and something else. Can you go into further detail about this? This is what mainly impacts the bonds. This is the quote-unquote interest rate triad. So FOMC has an actual effect on how this market delivers. The FOMC news candle created a bullish daily cycle sequential S&T with the Dow being Q3 and Q4. A bearish daily and weekly cycle began to form after, but they did not hold. Did the bearish SSMTs not hold because the news candle created a bullish SSMT? Therefore, bearish SSMTs that formed on the way up did not hold any substance because the bullish daily cycle is in control? Yes. Sequential SMTs or any SMTs or any TPDs that are opposing to the narrative will serve as retracements. The ones that are in tune with the narrative will serve as expansions to continue that narrative. Sometimes a relative strength shift within the same day. How do you deal with that? You're never going to know 100%, but generally the days where that does occur will be days like Tuesday. What did we say about Tuesday? Intraday, that is. Yes, low probability. So those typically tend to be the days where things like that occur. But I think we're going to go ahead and wrap this up shortly. So If anybody has any other last questions, now is the time. FOMC's role in halving theory. We'll get into that because it's directly in the middle of the week. I've just introduced weekly halving because there's more to it. And weekly halving also ties with how I'm able to predict daily cycle SMTs before they happen. The first candle, because this is the closest gap. But is everybody on the same track for what we would like to see in terms of price? To the moon. Say it again, somebody inform me. Bonds have to be in sync with premium and discount for sequential SMT too, right? Not necessarily. With that being said, hopefully you all found this one insightful. We have, what kind of cycle do you expect to see tomorrow to push price higher? We could see a daily cycle, but we've already had a good amount of daily cycles already this week, so they could be up. But if we're lucky, we'll see a daily cycle SMT either tomorrow or Friday. With that being said, hopefully y'all found this one insightful. I will speak with you all again in the Friday pre-recorded lecture. With that being said, good luck and good trading.